what are the trading signals you would look for before you say to yourself, gee, okay, enough's enough. Let's take profits. It's time to ride this wave down.
Well, first of all, I still believe that the markets are in for a haircut of about 50 to 60%. That has not changed. However, the tape or the market itself has not indicated that it's ready to go down yet. Again, when you go back to the money supply, which is over flooded from the Federal Reserve, because really, what are the dollars actually worth? This is an inflationary trade. You're getting less, although the numbers are bigger. It's really less for your spending and how much you have actually to spend at the store.
Todd Bubba Horwitz, Chief Market Strategist of BubbaTrading.com, joins us once again to talk about his outlook for 2024, stocks, commodities, metals, oil, the dollar. We're going to cover it all. First, a word from our sponsor, iTrust Capital, an IRA that offers more than 35 crypto assets and the lowest trading fees in the crypto IRA space. If you're over 18 and you want to open a new account with cash or roll over an existing account, click on itrust.capital/David and the link down below to learn more. Todd, Happy New Year. Welcome back. Good to see you.
David, always great to be with you. Happy New Year to you, and hope it's a big, prosperous year for you and Lynn and the Lynn group.
Absolutely. Well, it's because of great guests like you that we've had a good program in 2023. So thank you for coming back and joining us. Todd, let's start with what's happening in the markets over the last couple of weeks. So a bit of a pullback from its highs. What are you reading? Well, how are you reading this pullback right now? Is it sustained momentum on the downside or just a minor correction, you think?
Well, I think, David, it's probably more of a minor correction. I mean, there's a dramatic amount of warning signs out there that tell us that the markets have probably peaked. However, the one sign that we can never fight is the actual, what they call the tape or the trend. And the trend still appears to be higher, even with last week's approximately 5% pullback. Remember, we were up about 25% in the fourth quarter of last year. So as bearish as I am, it doesn't mean that I'm going to trade that way. I'm going to be, I'm going to trade with the market and trade with the tape. And I'm long the markets right now and will continue to be so until there's a reason to get short. I can give you all the reasons why the market should go lower, but until it actually does, remember, the market is an inanimate object that is traded based on order flow from customers. And right now, people are buyers more than sellers. And even with a little bit of a sell-off, you didn't have much panic, you didn't have much volatility, and you certainly don't have any volume right now. So it's really hard to get excited on either side of this market.
Is it just because people are coming back to the office? Why aren't we getting volume?
Well, I think that's a great point for today. Like today, the 8th of January, if we don't see some action this week, I would think I'd be concerned. Last week wasn't a big deal, even though it was the first week and everybody suspects that the calendar turned, so we're going to get busy all of a sudden. Well, last week was still kind of a holiday because of the way the holidays fell. A lot of schools, a lot of people were still on vacation. So I'm not really worried about it yet. But if we don't start to see some volume this week, I mean, last year's fourth quarter was about as light a volume as I've seen in a long time. And that is somewhat of a concern.
You kept telling me in prior interviews that you're bearish in the economy. You still are. We'll talk about that. But you were still positioned on the long side for stocks. Can you walk us through your logic here? Most people who haven't seen our shows before would think, gee, isn't that a bit of a contradiction?
I'm full of contradictions, David. When you look at the market, first of all, if you're an investor, which I'm an investor as well as a trader, but first as an investor, the statistics of the market tell you the markets go up 8.5% year over year in history. So if I'm trading good companies and owning good companies, why would I not want to be in the market? Trying to time the market is a fool's errand. You're never going to be able to time it exactly. And as they say, it's time in the market versus timing the market. So there I'm going to be long, but I also have a hedging program that allows me to stay in and actually accumulate more stock if the markets sell off. From a trader standpoint, we're playing the short-term tape or the short-term trades, and we have an algorithm that right now is still pointing upwards and still saying that the market has more room on the upside. So as negative as I am, and as negative I am on the economy, I mean, from the lack of jobs, from every walk, there is nothing that I could get excited about in this market. But the one thing that the markets tell me is that right now they still want to go higher. So I'm not going to sell into a market no matter what my opinion is, because the tape or the market or the trend is always right. And that's what people have to recognize when they look at a market. Forget about the news that you hear, because everybody knows what the news is. It's what are the investors? What is the money doing?
We spoke before the Fed announced a pivot in December, so that in the last press conference in December, Powell signaled 3 rate cuts. That's what the dot plot signal as well. We spoke right before then. Do rate cuts change your outlook on the economy?
Well, that tells me that there's still some concern, and I don't know that they're going to be able to cut rates or not. Now, again, they talk about it, but Jerome Powell himself has not really come out and said they're going to cut rates. There's more talk in the markets that they're going to cut rates, which has been more the creation of this rally. But if you want to believe in the jobs number, which I do not, but it was pretty hot last week, which would indicate that how are they going to cut rates with a hot jobs number like this? Inflation has not come down, and the government is trying to convince us that the month of November, inflation was actually negative, which I would, if you've been to the store lately, you'd kind of find that hard to believe. So at the end of the day, I mean, if they cut, they cut. But to me, a cut is a sign of weakness and a sign of trouble versus a sign of strength.
Isn't that just going to make interest rates lower, which would be beneficial for consumers, people who need to borrow money, businesses, for example? Basically, you're loosening the belt on credit. Isn't that good for the economy, though?
No, I don't think so. I think that the free market should determine what the rates should be, not the Federal Reserve. I think if you really look at it, what does it do? It allows people to borrow more money. It allows the banks to get more over leverage. And right now, there is a record number of banks at what they call the emergency lending window from the Federal Reserve borrowing money, which tells you that they are over leveraged. So we can pretend that the markets are good and that cutting rates is a good thing. But the truth of the matter is, if the economy was in great shape, there'd be no reason to talk about cutting rates, and rates would go up by themselves. I mean, my first mortgage was 16%. I didn't have any problem making the payments. I think that what we've done here is we've made everything into like a day trading vehicle, and everybody's on every breath of the Fed, which should not be a part of how we work and how the markets work. The free markets will tell you that interest rates can be supported at a much higher rate than they are right now.
The S&P currently is, well, it's at 4,700 points, right? 2023 saw new highs. So you were telling me last time that you were expecting the markets to at some point correct maybe up to 50%. What are the trading signals you would look for before you say to yourself, gee, okay, enough's enough, let's take profits, it's time to ride this wave down?
Well, first of all, I still believe that the markets are in for a haircut of about 50 to 60%. That has not changed. However, the tape or the market itself has not indicated that it's ready to go down yet. Again, when you go back to the money supply, which is over flooded from the Federal Reserve, because really, what are the dollars actually worth? This is an inflationary trade. You're getting less, although the numbers are bigger. It's really less for your spending and how much you have actually to spend at the store. So when I look at the economy, I say, well, the economy doesn't look like it's in too good a shape. And of course, jobs are not very good. What we're creating, the overall amount of money that people are making are not very good. The amount of layoffs are not very good. But again, until the market itself starts to head lower and violate some lower ends here, I mean, basically all we did last week with the sell-off was relieve very overbought conditions. And we're only now trading back what we would call around the mean of the market, or about the midpoint of where the market should be trading. So there is really no negative signs in the trading world. So all the negative signs I can give you in the economy have not translated themselves into the markets themselves.
Okay. Let's move on to other asset classes. Let's talk about commodities. So which commodities this year do you think have the best potential for gains?
It's amazing, David. The commodities have been really getting crushed. Okay, it's really, which is traditional. Strong equities, weak commodities. That's not a surprise. I think that the grain markets have a big shot this year to see some room, because I think one of the things you're going to see is a potential shortage of food. You have too high of a cost of production, and we're not planting again yet, and we don't plant until March or April. So when they start planting, I think a lot of farmers may choose not to plant this year because they can't afford it between the input costs and everything else that goes along with it. I do believe that gold and silver, which are commodities, are going to have a big year to the upside. As I said last year, I thought gold would make a new high, and it did. I did think silver would get in the 30s. It did not, but I do think silver will get into the mid to high 30s this year. And I think gold will continue to make some new highs here. So I think those look pretty good. But I think as a sleeper play, I think grains are a great play as a sleeper, because one of the things you're going to remember is how much lower are they going to go? They're not going to zero unless we're going to quit eating. And I don't think that's going to be the case.
You mentioned shortage of food. Can you elaborate on that? How are we getting a shortage of food?
Well, I think when you come down to, we come into planting season now, right? We have not planted the crop yet for this year. Okay. There's a lot of farmers, in my opinion, that cannot afford to plant because basically they're going to be planting at almost a loss. The cost of production, the input cost between fertilizer, fuel, and everything else is so high, plus the rate of borrowing, because now farmers, when they borrow money from a bank to produce or to plant their crop, they're paying 3 to 4 points higher than you and I would be paying. So it's because it's considered risk castable. So if you're looking at, if you're a farmer, you're saying, well, geez, if I plant and I don't get a miracle and these prices don't come down, I'm going to be planting at a loss. Am I going to go ahead and put that crop in the ground? And I would say the answer is probably no.
Okay.
So if I don't plant enough, that creates a shortage of food, right? Because if there's a higher demand and suddenly there's no food, where am I going to get it from? How am I going to produce it? I can't decide to manufacture grains out of nowhere. If they're not planted and they're not grown, then there's a lack of production. Then there's going to be a shortage of food.
Perhaps we'll just have to import. If that's the case, we'll have to import more food and maybe prices.
Well, remember that the world already, between Brazil, Argentina, and Australia and others producers of grains, this is not just an American problem, it's a problem worldwide. And of course, the population doesn't stop growing and we don't stop eating. So, and certainly with an economy that is weak, we could see, a much bigger demand for the grains because they're cheaper as far as a food product. It could be a mess. I'm not saying it will be, but there's a real possibility that could be that could happen.
Absolutely. Yeah, I understand what you mean. Well, moving on to inflation, because you mentioned the food market. The CPI has been coming down. Again, we don't know exactly if the numbers are fully accurate, but the trend's been down. Food prices are still high, though. Energy prices have been coming down. Let's talk about specific components of the CPI that you think will move the most this year. We're talking about food, shelter, energy, services. What's going to move the most, you think, this year?
Well, first of all, food and energy are a very tiny percentage, which is ridiculous in its own right. Because other than an emergency, what do people spend most of their money on? Food and energy. So when you make that only 4% of the entire CPI, that kind of queers or throws off the metrics to begin with. But I do think housing costs are going to rise. Rent's going to rise. I think a lot of the big things are going to rise because, again, at the end of the day, the landlord's costs are going up. The cost of heating, the cost of fuel, all these costs, although right now we're seeing, for example, oil lower, but we're still at high elevated prices. The only thing that might be salvaging this year, because it's an election year, you might see some funny business trying to keep prices low till we get through the election.
Why doesn't the government I'm just musing here. I don't expect to have the answer to this, but why doesn't the government just lower taxes on gasoline and then everyone's gas bills will be cheaper? Wouldn't that be good for the elections as well?
Well, do you think the government actually really cares? This is the real issue, right? The government is out for the money. Okay, they're figuring out how they can tax you more, and the hidden tax.
Well, no, they're gonna lower the price at the pump, and then it'll make them look good, and then the government's gonna get reelected. Yeah.
Yeah, maybe. Listen, you have a problem in the election system to begin with, whether you be a lefty or a righty, a Republican or Democrat, it really doesn't matter because you only have two choices. That's the real problem. So no matter where they go, they'll do something when it means the most. If they're going to do anything like what you're talking about, it wouldn't be until right before the election, because what do most people think about last? Where they are right now, not what happened 6 months ago. Where am I now? So if they're going to do something, figure September, October, right before the election, they're going to do something, if anything. But again, I think they're too far gone, and I think there's too many problems, and I think people can actually see through that.
Let's talk about the economy some more. We touched on certain aspects of the economy already, loans, for example. What do you think is wrong with the economy, and how will the government aim to fix it? Two-part question.
Well, I mean, I think the economy, first of all, I think government is too big. If you look at the jobs from last year, 63% of the jobs that were created last year were either government or social or special programs. So that right there, it tells me, if you read the Constitution doesn't state that the federal government is supposed to be the biggest. Government is supposed to be run city, county, state, with the federal government as an overseer to everything else. So it was never meant to be the largest employer in the world. So government to me is broken. Government to me is ridiculous, especially now that you add in the Federal Reserve, which is supposed to be a private entity, but is it really private? Okay. And I don't think that it really is, although it's classified as a private corporation. I don't think that it's really private. I think it is more controlled by the government. And I think that is the bigger problem here, is that we continue to allow illegal immigration, which raises taxes, which raises the cost of production, raises everything that the American taxpayer has to pay for, which is going to be hard to ever get away from.
Okay. Moving on to energy. Do you trade oil futures, Todd?
Do I trade? I trade anything.
Okay. All right. Next part of the question. What are you doing right now with oil? Is the pullback sufficient for you to get in again?
I'm short oil right now, although I do think it's going higher, but this kind of rhymes in with everything I tell you. Right now, the trend is lower, so I'm not going to fight that overall trend. I believe that oil is going a lot higher, but we are doing a lot more production in this country than we were. And of course, one of the big things of a lower cost of oil, what they tell you here is what? It tells you that the economy is weak, because production of oil is 80% of our entire economy, from the delivery to the plastic water bottles, to your car, to everything that you do takes oil. If oil is weak, it is telling you that the economy is weak. Okay. So I do think that, that it is giving us another warning sign that oil is continuing to fall. It's telling you how weak the economy actually is.
You said oil is still on a downward trend. I mean, it's already down, what, $20 from its highs?
Yeah. It's down $25 from when we had from the week before the Mideast crisis, when it traded $95. We're now trading at $70 right now, and it's probably going lower. I mean, it's down almost $3.50 today. And again, it's telling you, it's yelling to you how weak the economy actually is, because even Saudi Arabia, which is still one of our main suppliers, has not gone into, they've cut a number of times, but they haven't talked about cutting yet, because of course, if they cut production and raise prices too high, there'll be no demand for oil because people will just stay home. And I think that's a big problem.
Aren't you a bit surprised that the Middle East crisis didn't push oil up further? I mean, initially we had a bit of a spike, and then you know what happened the rest of the year, right?
I don't think so. I think that again, remember, it's with the more information that we get, the less effect that these things actually have. And there is an abundance of oil, a weaker economy. So how much are they going to push up? And actually, how much oil is actually produced in the Mideast? I mean, the United States has enough oil. Canada has enough oil to be self-sufficient. We don't really need to import oil from anybody. So we can produce our own. Why would we worry about what's going on in the Middle East? Not that we shouldn't worry, but again, from an oil standpoint, those are old days when oil was $9 a barrel, and you were happy to buy it from Saudi Arabia or from the Middle East because it was $9 a barrel. Now it's 70, not such a bargain to go out and buy it overseas.
Okay. Finally, the DXY, with interest rates from the Federal Reserve expected to come down this year, would you be short the dollar?
Nope. I think the dollar looks pretty strong. It continues to go higher. Again, as much as you want to say that there's reasons why, markets have a funny way of telling you where they're going to be. They have a funny way of giving you a signal, and maybe the dollar is too cheap to begin with for where the interest rates are. And I'm not saying it is or it isn't, but I know that correlations don't have to work today. And no matter what happens with interest rates right now, the dollar is still trying to push higher. Okay, and the dollar had a big up week last week and continues. It's maintained well over par for the last months. So why would I expect it to go down now?
I have to ask you about the jobs numbers, because we brought up the economy several times. Last week's jobs numbers came in harder than expected. An unemployment rate of 3.7%. More jobs were added than expected. Does that not signal to you, at least on paper, that the economy is still strong, at least for the labor market, Todd?
If I could use the right words, I would use them, but I'll just call BS right now.
Okay, look, thank you.
There's been 12 jobs reports last year. All 12 were revised going forward. Most were revised lower. This one will be revised as well. 63% of those jobs were government jobs. Those are worthless jobs as far as I'm concerned. Those aren't production. Those aren't a strong economy. Those are ways of special interest handing out jobs. To me, it's very weak. Go to the store. We don't count for people that are after 90 days. We don't count them anymore. You got to use the U6 versus the U3, which is the two different forms of employment reporting. To me, go into a store. There's no help. You can't find anybody, and companies are laying off in masses. So tell me how good the jobs are.
Wait, hold on. The companies that laid off top workers, they weren't good companies to begin with, right?
Well, Meta laid off a ton of workers. Amazon laid off workers into Christmas.
Sure. All right.
How good is business if Amazon, a retailer, is laying off businesses into Christmas? Okay.
Yeah.
That's not me. That's not an opinion. That's fact, right? Meta laid off thousands of employees. Google laid off employees. So how good is business? How good is the economy if we're getting layoffs?
So let's recap your outlook for 2024. You are expecting the economy to weaken further. I guess you're expecting the labor market to weaken further, more layoffs coming. Stock market eventually going to correct, maybe by the order of 50%. But you're still long right now until you see further indicators. Gold's going to go up. Dollar's going to go up. Am I missing anything?
No, silver's going to go up. Commodities might, grains might go up. Again, the economy will turn. There'll be plenty of warning signs like we're seeing now. If I were going to try to pinpoint, I don't know that we could see much real action before the election, but I would think that by midsummer, towards the end of summer, third, fourth quarter, if we're going to see a big sell-off, it'll start then.
Are you concerned about wars breaking out across the globe or current conflicts escalating?
Well, I'm always worried about that, but I'm more worried about the current conflict in the United States. I'm more concerned about the problems that we have right in this country here versus anywhere else right now. I mean, the amount of hatred that's going on in this country right now and the amount of dissension in this country has become at crisis levels, and I think it's a big concern. And again, and that also ties into the others because, of course, we're a little bit weak in this country right now because of our own problems here.
Fair enough. Todd, thank you very much for an excellent summary. Where can we follow your work?
You can reach me at Bubba Trading, BubbaTrading.com, or if you have any questions direct, you can email me at Bubba@BubbaTrading.com. Love to hear from you. I love David's show, and he does a great job and always lets me speak my mind.
All right, excellent. Well, we appreciate your candor. This is why we have you. And yes, please reach out to Todd in the links down below. We'll put the links in the description. Thank you very much again. I'll speak to you soon.
Thanks, David. Have a great day, man.
And thank you for watching. Don't forget to like and subscribe.